Good morning, everybody. Happy Inflation Day, everybody. We are just a few moments away from the July Consumer Price Index, or CPI. Markets are expecting 3.3% year-over-year headline inflation for the CPI. That would be up slightly from last month's 3.0%, but that is largely due to the base effect, because a year ago we had kind of a leveling off of inflation. The month-over-month number, 0.2%, is expected to be the same rate of last month's 0.2%. So that is the headline CPI, which includes volatile food and energy prices. But the Fed just loves to ignore food and energy prices for some reason, so they're going to be focusing a lot on core inflation. Core inflation is expected to come in at 4.8% year over year and 0.2% month over month. So those are the expectations. Higher than that would be a miss. Lower than that would be a beat. Now, we're in this position right now where we're kind of where good news is really bad news and bad news is really good news, because it's all about what is the Federal Reserve going to do. The Fed. Bad news means a more aggressive Fed. Bad news means a less aggressive Fed, means less interest rate hikes. And so bad news in the inflation front might actually be really good for stocks, because it means no more rate hikes. But good news in the inflation front is really bad news. Oh my goodness, this is mentally exhausting. This is why we don't have a free and fair market. We have a Fed market. The Fed determines the price of everything. But let's talk a little bit about what some of the big drivers of inflation have been in prior months before we get the new report. Energy was a big one last month. Energy has been a big driver of the declines in inflation over these last few months. We had a negative 16.7% year-over-year number in energy last month. That's down sharply. Now, oil prices have risen in July pretty substantially, so I suspect we're going to have a higher number for energy index. It's going to be a lower negative number, I should say, which would be a higher number. Food was 5.7% last month. I don't expect any big change in food inflation. Shelter's another big one. The index for shelter was 7.8% last month. Now, there is a lag in the CPI data, the way they report it. Shelter accounts for almost a third of the index, and within that third, the largest contributor is owner's equivalent rent. I have railed against that data point a lot on this channel, owner's equivalent rent. They just call up and they say, oh, how much would you rent your house for? And they say, I don't know, my mortgage rate plus $200. And they say, thanks, bye. And that's pretty much how they collect the data on the rent. Well, that has shown declines in recent months, but very small declines, even though the national averages of rents have actually been falling pretty substantially, especially in some key major areas. So owner's equivalent rent is one of those numbers right now that is going to be very hard to forecast, because the rent is falling. You can see it in Zillow, you can see it in Redfin, but it doesn't yet show up substantially in owner's equivalent rent. We did have a decline from a peak of about 8.1 in the shelter index down to 7.8 last month. So we'll see if that decline continues today. We are about 1 minute away from the CPI coming in, so we're going to shrink my big melon of a head. And while we're shrinking my big melon of a head, won't you expand that big, beautiful like button? And if you're new to the channel, please subscribe. We do this every month when CPI comes out. We also do a daily live stream at 9:30 a.m., which will be changing to 9 a.m. very soon. But here we go down in the bottom right. This is bls.gov/CPI. This is where we'll see the index in just 1 minute. It's still showing the June number right now. Real quick, stock futures, we've got the S&P is up 23 ahead of the open, or about 0.5%. The Dow is up about 180, also about 0.5%. And the NASDAQ is up 0.75%, or 113 pre-market. So stocks right now are optimistic about the CPI. We're still showing June here. It's now 8:30, so I am going to refresh this screen like a madman until they give us the July numbers. Come on, BLS. Give me my July CPI. 3.3% is the expectation. Place your bets in the comments, folks. Where do you think it's going to come in? Still showing June here. You're a few seconds late, BLS Gov. Get with the program. Still showing June. Still showing June. Big question will be how much that energy, while we're waiting for that to refresh, check out the oil chart, guys. This is what I'm saying. We're probably going to see the energy index a little bit higher. Oil has just been up and to the right pretty much nonstop for the last month and a half here. So oil is going to play a big role. There we go. Just up. CPI 0.2% is the month-over-month number from July, and the headline number 3.2%. So that is a beat. We've got 3.2% CPI versus the 3.3% expected. That is a beat. Inflation is lower, so stocks should like that. Lower inflation means less aggressive Fed. Less aggressive Fed is good for stocks. So let's see if that happens. And here I'm going to bring that up. July CPI, 3.2% headline. Let's see what we've got inside here. The index for shelter was by far the largest contributor to the monthly all items increase, accounting for over 90% of the increase. So there's that rent number I was telling you about, how that's so important. Over 90% of that 3.2% was from the rent, and that's a category that this BLS overstates. The index for motor vehicle insurance was also contributing. The food index increased 0.2% month over month. That's up slightly from the last reading, which was 0.1% in the previous month. The index for food at home was up 0.3 for the month, while the index for food away from home or restaurants, that was up 0.2 for the month. The energy index rose 0.1% in July as the major energy component indexes were mixed. So we had a rise for the index in July. That's actually pretty small increase versus the prior month. Let's see, the core inflation, the index for all items less food and energy, rose 0.2% month over month as it did in June. That is in line with expectations. And let's see, what else do we have? The indexes for airline fares, used cars and trucks, medical cares, and communications were those that decreased. The all items index increased 3.2%. So let's look at the grid here. All right, so here's your headline number in the top right. There's your 3.2% year over year number. There's the month over month number for July. You see it was the same as the June number. Food at home, 4.9%. That is up from, that is down from the food index. Let me just do that. 4.9%. That's down from 5.7 last month. So less food inflation. That is disinflation. All right. When you see inflation going down, that still means prices going up, but prices going up slower. So we've got disinflation in food. Let's look at the energy index. We've got negative 12.5. Now, the energy index last month was negative 16.7. So I don't know what you would call that. You've got less deflation in the energy index. So with that deflation, my goodness, these prefixes are exhausting. That was negative 16.7 last month. Now it's negative 12.5. So energy is starting to put upward pressure on CPI again. All items less food and energy. The core number came in at 4.7% year over year. That is a beat of the 4.8% the market was expecting. And I think the market is probably going to pay more attention to that core number versus the headline number because they love to strip out that volatile food and energy. So 4.8% for the core number. That is a beat. Let's see, the shelter index. Whoa, look at that. A big drop in the shelter index. 6.1% for the index for shelter. That was 7.8% last month. So that's actually a pretty big drop there, even though it's only 0.4% month over month. That's actually a step up from the prior month, but a big change in that year over year number for shelter, still contributing to most. Oh, wait. No, you see, this is the flaw of live streams, guys, and doing this chart. I was looking at the services less energy, so erase that whole last 5 seconds. Apologize for that one. There we go. Shelter was 7.7%. So there we go. We did see a decline in shelter, 7.7 versus 7.8 last month, but it was a small decline. Now, that's what I was saying, that the index for shelter should be falling faster than it is because the rents, if you look at Redfin, if you look at Zillow, they're falling pretty fast, but you've got this lagging indicator because of the way they collect the data in the CPI, 7.7 versus 7.8 last month. Now, remember, guys, almost all of this growth in CPI, almost all of the 3.3% or 3.2% headline number was because of this shelter index, which should be lower, which means CPI should actually be lower than they're telling us right now. I know the CP lie is the big, the way people like to call this, because they did understate inflation so much last year, mainly because of how they report the shelter index, and I agree with that wholeheartedly. But this year, it's the opposite. This year, the rent is falling. It's falling faster than CPI is telling us. That's why I've been saying I think they're making a big policy mistake with these rate hikes, especially since March, since the bank failures. I think they've gone too far, and this lagging indicator in CPI, this shelter index, is probably why. Now, another important category is transportation services, because Jerome Powell has been talking about his core non-housing services is one of the categories he wants to see less inflation in. Well, that one is actually up. So Powell's not going to like that one. That's up from 0.1% month over month last month in June. Now it's 0.3%. And the transportation index was 8.2% year over year in the June number. Now it's 9%. So you can thank, apparently, Taylor Swift. Everybody's saying the surge in travel is due to people chasing Taylor Swift around the country. Okay, I don't get it, but I'll believe it. So that Taylor Swift tour is supposedly over, so maybe we see a big decline in travel coming up soon. Let me know in the comments, do you think the spike in transportation services prices is over? Now that Taylor Swift is done her, I can't even keep a straight face when I'm talking about this. All of the commentary about the Barbie movie and Taylor Swift tickets in financial press has been nauseating lately. I'm sorry. I can't even talk about it with a straight face. All right, last topic I want to talk about is new and used vehicles, because new cars last month were 4.1% year over year. Now they're 3.5%. So we've got disinflation in new cars. Prices are still rising, but they're rising slower. And that's actually, look at that, we've got a negative print in July, negative 0.1%. That's versus the flat number from last year. So we actually got a slight decline in new car prices. That's interesting. And used cars, negative 5.6% year over year. That was negative 5.2 last month. So used cars getting cheaper, and they're getting cheaper faster. So we've got deflation in used cars. Also, negative 1.3 month over month. That's a big decrease from the negative 0.5. So used cars getting a lot cheaper. So let's take a look real quick at what stocks are doing since this came out. This is looking at the stock futures. We've got the S&P is now up 0.6%. So stocks are up a little bit. They are liking this, but they're not up very much. The Dow is now up 0.53 or 187. We did get a little bit of a spike upward in stocks, but it's given that back since. And the NASDAQ, though, the NASDAQ is liking this one, currently up 0.9% or 138 points. So looks like an up day on a soft inflation print. Headline number 3.2% year over year. Core number 4.8. All right, guys, that is your CPI report for the month of July. If you're new to the channel, won't you please subscribe and stay for a while? If you're not new to the channel, remember that thumbs up button. I appreciate that very much, guys. I will be back in about 50 minutes for my daily live stream in the morning, my morning update live at 9:30 a.m. So don't go too far. We'll be right back. Thank you, everybody, for everything, for your time, for watching. Thank you to my Patreon supporters for everything you guys do for the channel. Link down below, should you feel so inclined. Hi, Mom. Hi, Dad. I love you guys. And until next time, live small and dream big.